Does your business have multiple, completely separate locations? Or operate through separate business entities while still owned by the same head company? Hi, I'm Jeff at Method Integration. And if you're all too familiar with that multi- or intercompany accounting struggle, then you're going to want to watch this video. We'll walk you through what an intercompany financial transaction is, why they're so important, and how to correctly set them up in QuickBooks so your financial statements are accurate. Let's get started. Invoicing, paying bills, sending deposits. Even with just one company or location, setting up these transactions properly can be difficult. When you add other company-owned locations or businesses, like a franchise or a wholesale division, things can get even more complicated. That's where intercompany transactions come into play. An intercompany transaction is a transaction between two entities, like locations or sub-companies within the same business. Those entities are called subsidiaries, while the business that owns them both is known as the parent company. As subsidiaries, those two entities may do business together. So how do you properly track the accounting within each of those two companies, as well as the parent company? Let's take a look. Say your wholesale leather subsidiary sells inventory to your baseball glove manufacturing subsidiary. Leather & Sons sold the leather to Gloves R Us for $20,000, with $12,000 as a cost to themselves. Without intercompany consolidation, it looks like Leather & Sons wholesaler has an $8,000 profit, and your retailer, Gloves R Us, is out $20,000. But what about your parent company, from bovine to baseball? In the consolidated financial statements for your parent company, you'll need to reconcile those cost and profit details properly, adding what's called eliminating entries. These entries account for the difference between the overall cost of production, $12,000, and the sale price, $20,000. In this example, Leather & Sons wholesaler ends up with a net zero cost, while Gloves R Us's retail costs are reduced to just $12,000. This way, you haven't incorrectly shown that you've made a profit by selling to yourself. You might be wondering, if all the subsidiaries are owned by the same parent company, why does it matter? Why does it make a difference to record the transactions as intercompany at all? Aside from helping your business run more efficiently, there are important legal and financial reasons why it's important to track intercompany transactions accurately. As we saw in our baseball glove example, how you record a transaction can greatly affect the numbers. When your consolidated financial statements are accurate, not only do you make things easier on yourself in the case of a potential audit, you may even reduce taxes owed based on your profits and avoid unwanted fees and penalties. In order to make smart, accurate decisions, managers need up-to-date financial information that accurately reflects the state of the business. When you eliminate misleading intercompany transactions, it's faster and easier to immediately assess the true performance of each division. Of course, tracking these transactions without the proper tools can get very confusing very fast. Without a unified system, multi-entity businesses using multiple QuickBooks accounts lack visibility into each location and can't get a consolidated view of sales, customers, or performance. With every location operating independently and updating their own QuickBooks files separately, your headquarters will struggle to maintain control. This typically leads to disconnected systems, manual workarounds, inconsistent workflows, and duplicated effort. As the business grows, these gaps widen, making it harder to scale, standardize, and make informed decisions. Method CRM helps multi-location and franchise businesses centralize sales, operations, and financials all in one CRM, connecting multiple QuickBooks accounts together. With powerful automation, permission controls, and instant two-way QuickBooks sync, Method delivers enterprise-level customization and functionality without the cost or complexity, helping you scale while gaining control and visibility. Here's how it works. As a QuickBooks integrated CRM platform, Method streamlines intercompany workflows. You can use Method to sync multiple QuickBooks files or online accounts, automate your workflows for more efficiency, share customer or vendor details to avoid duplicate entries, create custom reports and dashboards to aggregate data across all entities, and even add approval workflows, all saving your team time and money. All of this is possible with support and customization from Method's team. Okay, now that we know what intercompany transactions are and why they're important, let's look at how to do it within QuickBooks. QuickBooks has a few different options when it comes to setting up intercompany transactions, depending on which version you're using. For example, in QuickBooks Pro and Premier, each company is a separate file. And because company files aren't connected, most users manually post their transactions in the corresponding subsidiary's book, a time-consuming and error-prone activity. One way around this is to set up workarounds, minimizing errors and saving you time. Let's look at one of those workarounds, specifying due to and due from accounts. This process isolates intercompany transactions in your accounting records. A due to account is a payable balance, while a due from account is a receivable balance. Designating these intercompany transactions isolates them, resulting in net zero debit and credits before you roll up your group financials. If you're using a Diamond, Accountant, or Platinum QuickBooks Enterprise account, you can link multiple company files, set your due to and due from accounts, and create intercompany transactions in one file that automatically updates in the other company file, all in minutes. That's all for now. Want to learn more about Method? It's the only CRM that connects multiple QuickBooks accounts in one place, centralizes operations, and drives standardized process automation across locations. Visit method.me and book a call with one of our specialists to learn more.